We went on a binge, a borrowing binge.
These workers say they haven't been paid in 2 years.
Demonstrations over perceived economic mismanagement by the government.
The police didn't want this protest to happen.
This is not a Ghana we sign on for.
The system is so hard.
What happens when a government borrows too much, is unable to service its debt, and has a failing economy to contend with? Today, we're diving into a critical issue that's impacting millions of lives in Ghana. It's massive debt crisis.
And this is what we witness in Ghana with the Domestic Debt Exchange Program.
By the end of this video, you will know what Ghana's debt problem is all about, why it's such a big deal, and what might happen next. So, let's jump right in. Okay, first things first. Ghana's public debt as of June 2022 was a staggering 393.4 billion Ghana cedis. That's almost $40 billion and equals about 78% of the country's GDP. But what does this really mean? Let's break it down. Every government borrows money. It's normal. Governments need cash to build roads, they need cash to pay public workers, manage waste, and well, run the country. But instead of waiting for tax money or income from natural resources to roll in, they borrow money from two main places: domestic sources and foreign sources. Let's start with domestic sources. Ghana's government borrows money locally through something called the money market and the capital market. The money market is where short-term loans like treasury bills come in, and the capital market is for long-term loans like bonds. Now, when you or even your bank buys treasury bills or a bond, you are actually lending money to the government. Pretty cool, right? Now, foreign sources. Ghana also borrows money from outside the country through two main ways: concessionary borrowing and commercial borrowing. Concessionary borrowing is like getting a loan with super low interest rates. This usually happens with organizations like the World Bank or from other countries like Japan or the USA. The loans are cheap, but often they come with conditions. Then there is commercial borrowing, which is more expensive. Ghana's government has been borrowing big chunks of money from private lenders over the past 15 years through something called Eurobonds. Why? Because they can borrow more money with fewer strings attached. But this comes at a cost: higher interest rates.
The reason why a nation may be unable to pay is that when the loan comes due or the loan is coming due, it becomes clear that the public finances of the nation has deteriorated to the level that it would be unable to attract new people to give it money. And so it defaults because it's unable to raise new money on the market.
Now, here's something interesting. The size of a country's debt doesn't really matter as long as investors believe the country can pay it back. That's why the USA, with a debt to GDP ratio of over 120%, can still borrow money at just 3% interest. But investors are losing confidence in Ghana, and that's a big problem. So, how do investors decide if a country can pay back its debt? They actually look at a few key numbers. One of the most important is the interest payment to revenue ratio. In simple terms, it shows how much of the government's income is being used to pay interest on debt. In Ghana, this number is 55%, and that means more than half of the country's or the government's money is going into just paying interest on loans. In the USA, it's only 15%, and that is the problem there. Because of this, foreign investors are pulling out. They've stopped lending Ghana money. The government borrowed $3 billion in 2019, another $3 billion in 2020, and yet another $3 billion in 2021. But now, no one wants to lend Ghana money anymore, and this has hit the economy hard. The value of the Ghana cedi plummeted, making it one of the worst performing currencies in the world.
If the government puts its hand in your pocket, e-levy.
The e-levy.
Desperate to raise money, the government introduced a new tax called e-levy, which charges 1.5% on electronic transactions. But it didn't work as planned. Instead of collecting the 1.4 billion Ghana cedis they expected, they only got 93 million at that time. With no other options, the government had to borrow from local sources. This pushed up interest rates on treasury bills from 12.5% to a whopping 30%. But on the capital market, long-term investors are saying, no thanks. They've lost confidence in government's ability to repay its debt. So, what next? Ghana has turned to the International Monetary Fund, the IMF, for help. The IMF can provide funds and guidance to help Ghana manage its debt. But there's a catch, and there's always a catch. To get help from the IMF, Ghana might have to restructure its debt.
And this is what we witness in Ghana with the domestic debt exchange program and also the directive that financial institutions should mark the funds they are holding to the market, which essentially means they should tell the customers that the amount of money that you gave them, they will be unable to pay you if you are withdrawing your money today.
Under the domestic exchange program, domestic bond holders will be asked to exchange their instruments for new ones.
The government could ask investors to accept a haircut.
There will be no haircuts.
When you talk about a haircut, in the simplest terms, it means that somebody you lent money to is going to pay you only a proportion of the money that you gave the person. So, for example, if the government of Ghana issues 1,000 cedis worth of bonds and tells you that it's giving a 20% haircut to its creditors, it means that the creditors are only getting back 80% of the money. So you give them 1,000, you are getting back 800 because you have a 20% haircut, which means 200 is gone. And that's the simplest definition of a haircut.
For example, if someone bought a 10-year bond at 20% interest rate, the government might ask to extend it to 15 years, lower the interest rate, or reduce the amount owed. Now, why does this matter? If Ghana restructures its debt, investors, especially banks and businesses, could take a big hit. This could shake confidence in the entire financial system and set back investments in Ghana for years. But at the same time, it's becoming clear that some sort of restructuring will be necessary.
Yeah, Jumana, this is an important step for Ghana and really for international bondholders, especially in the African region.
In the end, no matter what happens, there will be some pain. Governments, businesses, and regular people will have to make sacrifices.
The due process should be followed and our money should be given to us. Are we asking for too much?
Ghana's debt crisis won't be solved overnight, and the effects will be felt across the economy. The decisions made now will shape the country's future for decades to come.
How does a new government avoid getting into a situation like this? Now, to start with, I do not think there's much of a leeway for a new government in terms of their own policies or programs, simply because the volume of debt that they are going to have to pay off will essentially strong arm them. It will put them in chains, in handcuffs, essentially, because they will not be able to carry out large public projects in terms of either infrastructure or in terms of social programs. Now, if you have billions of Ghana cedis maturing in 2025 that you need to settle, you have about $1 billion to $1.5 billion US dollars maturing in 2020, between 2025 and 2026 that you need to pay external creditors. And then you have the bilateral debt, that is the debt Ghana owes to other countries, that was frozen up to 2026, and you are going to have to pay after 2026. Then you can realize the situation that no matter who wins, they are going to be faced with. So I would say that, first of all, they don't have much leeway in terms of new spending. But if they do, assuming they do, I would just say that they should not carry out projects that are not properly costed, that are not properly forecasted in terms of the impact that they will have on the public purse. And they shouldn't just go for loans because they are available, because we've seen that the interest rates of the loans, and especially Foreign loans, because of the forex risk element, are very crucial in terms of making sure that you have properly forecasted the impact they will have. And so that's the advice I would give to a new government.
If you like this video, don't forget to like it and share with other people who might be interested in understanding what's happening in the economy of Ghana. And stay tuned for our next video on this channel.